What's up, everybody? Hope everyone is having a good day so far or has had a good week. It's Friday. I've had a great week. Um, the signals in the Discord have been fire. So hope everyone is loving that. I know I am. Um, but I've been getting requests on making supply and demand videos. And I think what I can do, or what we can do, we can kind of break it down into a series. I'm not sure how many videos the series will be, but we can break it down into a series. So today we're going to focus on just a basic understanding of uh, supply and demand. All right. So um, for supply and demand, there's I look at it in two perspectives, and really, and um, the first thing really to understand supply and demand, you need to understand that the banks. I'll write this down because this is a nugget. You need to understand that banks need to sell higher and buy lower than everyone else. You need to understand that because um, the bank's goal is to make money off of everyone else. So in these examples, just even right here, the market's trading up, and then we see this high get created right here. And I mean, if you were looking at this Wyckoff terms, you could say that that's your buyer's climax, but we're not looking at this from Wyckoff terms, basics, supply and demand. So we see this high get created. Now, you see all these lows kind of in this consolidated area, right? You can imagine retail is buying here. You could say retail is probably buying in this area, right? So what do the banks do? They take it lower in a lower level of demand, right? And then what happens? That previous high that was created, you see that previous high, we trade a little bit higher than that. And now this previous low, we trade a little bit lower than that. Now, some levels will not get traded uh, higher than or lower than, depending on trend also, obviously. But as you see, we have a low here. And then look, if traders were buying in that area because of this low, look at the banks. They took it up higher, or they brought the demand level lower, so then now they can buy, right? Higher, higher, right? So they can sell lower, lower, lower. Okay. So now if we're looking at this area, right, and we notice that uh, the market has been kind of going down, right? So what you would want to see is either a trade above this area, like this, or above this, or in this general area right here, like this. It's not that complicated of a way of looking at things, right? So also what you need to understand too is when I say supply, it's you're looking for supply zones to sell from, and you're looking in demand zones to buy from. So you could say that supply is high and demand is low, right? And what I mean by that, and this is like the first perspective I see on supply and demand, that the banks, because like I said earlier, the banks' main objective is to take people's money. So of course they're going to buy lower um, than everyone else and sell higher than everyone else. So what we could see, from time to time, let's say we have this, let's say we have this supply zone, and then we have this demand zone here, right? So, all right, so we have this supply and this demand zone. Now, what we would look for, is basically you're looking for fresh areas of um, supply and demand. So if we're getting, what is that? So if we're getting, you know, trades like this, right? In this, there's kind of consolidation is what I'm doing here. You can see that there's this liquidity that is being built up on both sides of the market. So what happens is, we'll see aggressive moves from the banks like this coming down and making a lower demand zone, a lower level than where everyone else was buying. And then they'll aggressively push the market up and we'll take it back down to that same demand level to mitigate out of orders and come up and do the same exact thing. So if we flip this whole thing around and we saw this impulse um, after this liquidity had gotten captured right here, if we saw this, right, so we could trade back up into that supply area, right? So either what's going to happen is we're going to get a nice rejection off of a point of interest here, or we're going to make a new um, high and trade down that way, right? So that's um, really basic, right? Looking at supply zones and demand zones. So now let's go look at a cut at this area right here on EuroCAD that's perfect for supply and demand. Okay, so let's say that we had um, we had this demand area right here. Say we have this demand area here, and let's say we have this supply area here. Now I want you to notice, or what I want you to notice is, the middle, like obviously I don't trade like this, but if you look in the middle area, right here, right? So we have these peaks down here, which is ideal for our trading because we want to trade out, on the beaches, um, out on the beach, right? We want to trade out on the beach and not necessarily in the ocean with all the water, splashing back and forth. We want it to flow back up to the beach, and then, we catch the waves. We ride the wave. We don't get taken out by the wave, if that makes sense. Okay. So when we're looking at this, right, we'll just start right here. Okay. So, what one thing that you need to focus on if you're looking for entries in supply or demand areas, first off, you need to understand that there's one of two things that are going to happen. So let's say you have your buy to sell move, right? And, you have that outcome candle. So there's going to be one of two things that are going to happen. You're either going to get a rejection here, or you're going to have a run of that high and then move back down. And that's the same thing for this too. You're going to either see a rejection like this, or you're either going to see that, right? Now, you might be thinking, well, but that's a double top and a double bottom. No, it's not. This is a double top. This is a double bottom, right? You see how these are equal? Yeah, I'm not looking for that. I'm looking for a impulsive move up and then a trade back down into that area to go up for my W, right? Not a double bottom, okay? Or the next scenario I'm looking for would be, an impulsive move up and then a liquidity run between that below that low, and then we head higher. Okay, same for bullishness, right? Or excuse me, same for bearishness, right? I want to see an impulse and then a trade back into that point of interest, that supply, that fresh supply zone that had that significant impulse, and then a trade down. And then scenario two, you would get that impulse and then a stop run and then a continuation. Okay. So in this area right here, or in this area, right, what do we see? We see, this demand level and this supply area up here. So what could have happened, right? We could have gotten a rejection from this area, or scenario two, we could have got that stop hunt, right? So now we identify, right, if we sold here and took a loss, or we saw the market trading down, right? Um, we can have scenario two in mind that price might just be stop hunting that previous demand area to go higher. Okay. So after that, after we notice, you see that impulse, this strong impulse up with that, right? And you can identify that area. Okay. So when we get that clean break of structure, which would have been right there, right? Also, also in this area, look, look at what, I just said. See how that's like that W that I was just drawing like a couple seconds ago? right? So that impulse, boom, right here, W, right? Not a double bottom. Here is the same thing. Look, boom, we get that run lower, and then we move higher. Two W patterns back to back. It really doesn't surprise me. Price, uh, the structure of the market is fractal in general. So, um, yeah. So let's continue. Look, we get this high here, but then you see that choppiness, and then you get that run above, creating that higher supply level. So what do I like to look for? If we create a new level of supply, or not new, well, yeah, I guess new, but a higher level of supply, um, and a significant drop like this, right, that broke structure. You need that drop to break structure, which is funny because we trade lower than this structure and then trade back up. So, so yeah, it's funny to me. But yeah, after we after we spotted the bank's manipulation of creating that higher supply level, um, prior to this significant drop, we wait for that retracement, that corrective retracement back up to our point of interest. So then we can sell off, right? If that makes sense. Now, we sold off to that buy area. Now, what happens, right? What happens? That previous area that we were selling at, or if anyone was selling at, let's say they have stop losses above this high here. So we have stop losses above that high. We'll put a red there. Okay, so we understand that that's stop losses. So where does this buy take us? Where does this buy take us? Takes us right through all those stop losses, all of this money, right? Okay, so um, there are more examples on here. Um, but I think you guys might be getting the understanding of um, that banks need to sell higher and buy lower than everyone. I mean, you can study this and backtest this on a chart, and it won't take you long to see it, to understand it, right? We'll do one more example. We'll do one more example, right? So look, we get this supply back up into this supply zone. Oops. Back up into this supply area that we had, right? We see this um, drop, but it was kind of choppy, right? There were significant candles right here that were dropping, but overall it was choppy. And this is choppy too. So what happens, right? The new area of supply, okay? Are there any significant points of interest in this? Not necessarily. So let's see if we don't get scenario 2, where we get that supply and then that run above that high, right? Like this. So scenario 1 would be like this, right? Remember? Scenario 2 would be that run, okay? So let's remember that. Um, anyway, when we run above those highs, right? As we did right here, we see this. This was that significant drop. This one, not so much. But this right here, it was. So where would we be looking for price to correct itself back up to, right? Right back up into this new, fresh supply area for the sell. So yeah, I think that's going to end part one for this. Um, uh, I think it was very insightful. I hope, at least I hope, some of you guys learned something from this video. And uh, yeah, I mean, it's just, you gotta, take this video and back test these basic things, this basic information that you've just learned from this, back test this, and then, we'll be having a part two coming out soon. So stick around for part two of supply and demand. And I hope you guys have a good day, and I'll catch you next time. Peace out.